The debt ceiling deadlock is just one of three major obstacles the U.S. economy will have to overcome to skirt a recession in the second half of the year. Fed Chair Jerome Powell reckons it can be avoided, but today's Big Take story looks at the odds stacked against him. Joining us now is Bloomberg's Jill Disis in Hong Kong. And Jill, you've taken then a look at this in this Big Take story, a look at Powell's assessment of the U.S. economy and pointed to three areas where it might be found wanting. What are the biggest warning signs that Powell needs to look out for?
Yes, Anna. Well, I think as Bruce just explained, there's certainly some of these talks over what's happening with the debt ceiling is one of those big concerns going forward. We'll have to see how that's resolved in the weeks, potentially months ahead, I suppose. But then also we were taking a look at environmental risks that are presented by El Nino conditions getting into the summer. Now, I mean, if we've got some extreme climate issues as we head into the summer months, you could be looking at potential commodity supply chunks and further price pressure that could make inflation, which is already very stubborn, continue to be a problem. But then, of course, there's that ongoing banking crisis and how exactly that may continue to vex, Powell and the rest of the Fed going forward. I think that what we've seen, this sort of cascading level of bank failures, starting with SVB and then those continuing risks of contagion and how those have spread in the past few weeks has really sort of become a continued pain point for Powell to kind of take a look at. And I don't really know that those are issues that are going away anytime soon at this point.
Yeah. And we'll get more details from that SLOOS survey of senior loan officers. We'll get that data today around the credit provision to the U.S. economy by banks. But in terms of the rate story, I mean, Chair Powell has been pushing back against rate expectations, rate cut expectations, because he and sticking to this more positive view of the U.S. economy. But many in the market do see rate cuts on the horizon. So what are we expecting to see there?
Yes, well, I think that in addition to Powell's remarks last week, really pushing back strongly about the idea that there could be cuts coming forward. Now, of course, on one hand, he kind of has to say that because even if the Fed starts pausing rate hikes going into summer, I think they'd still have to preserve some room to make adjustments going forward because I think as we've all been discussing for so long now, inflation just really isn't, it's still incredibly sticky. It's really hasn't been tempered enough for Powell to consider, cutting rates. And then we had the added complication of those really strong job figures on Friday, kind of giving even more room for that idea that rates could continue to be high. That being said, I think you're looking at investors kind of take a look again at this credit crunch, some of these issues within the banking sector as reasons why, maybe the economy, as it begins to slow, there might be reason to pursue lower rates a bit earlier. So maybe that's not something that comes in July, for example, but maybe, September onward is when you might start seeing those adjustments.